I'm going to teach you guys how to catch reversals without actually getting squeezed. Now, let's say the price is actually maybe trending, price is trending, trending. The first thing you want to look for while trying to catch reversal is you want to look for a key level. You want to be able to spot a key level, that a higher time frame key level that price is going to react off from. So as price is trending and hits that higher time frame key level, you're now looking for a couple of things. You want to see that price actually break the last previous high, the last higher low. It breaks it with a body close, not a weak close. After it breaks it, you want to see some form of liquidity, structural liquidity that was created. Then you can now actually take your entry at this place and trade the reversal. Now, what do I mean by this? Now, if I'm to explain this thing well, what the first thing you want to see is that price swept liquidity. After sweeping liquidity, you want to see that price You want to see that price breaks structure with a body close, breaks the last higher low. It breaks the last higher low. At this point, you have a market structure shift. And the second criteria you're looking for is some form of structural liquidity. You want to see that there is a structural liquidity at this point, close to this key level. Then you take an entry at the other block that was formed. Take an entry at the other block. Set your limit order at this place. Put your stop loss at the high and take your put your take profit based on your trading plan. Right. So the next thing, one last thing you want to look out for is divergence. What is divergence? Divergence is actually a crack in correlation with the correlated pair, right? So if this is Euro USD, you want to look for GP USD or DXY and to look for crack in correlation because they're actually correlated. They usually move in line. So what is this? And so in case if this is Euro USD, as you can see, it actually swept this high in USD JPY, in GP USD or USDX, which is the dollar index. You want to see something. If this is GP USD, you want to see that price fail to break the previous high. If fail to sweep this high, it swept it in this one, so it should fail to sweep this high in this place before the structure shift. Now, what you have here is a divergence. So this is a crack. So this shows you signs that the smart money is behind the move. Okay, they really want to they really want to move price. You know, when really want to move price, there's going to be crack and correction most time, right? Sometimes the shift occur without this divergence, but the divergence makes it high probability. And the reason for this liquidity sweep, why this liquidity sweep is key, it shows you that the intention, because before price changes state of delivery or before price moves to a specific direction, liquidity must be engineered. It must take out liquidity. And this key level is the stage, is the first thing you want to see before you start anticipating a reversal. If there's no key level, I don't see any reason why you should be trading the reversal. And let me try to summarize this and before I give you guys live example. First, what are you looking for? A key level. The first thing you want to look for, a key level that price is going to react off of. And when price keeps trending up to that key level, now you want to see that price swept liquidity, then finally break the previous higher low in an uptrend, breaks the previous higher low, then you want to look to see if there is some form of structural liquidity around this place. Then if it's there, you can actually take an entry at the other block. So price is going to take out this structural liquidity to trigger you out, to trigger you in. And something else you want to look out for is divergence. Divergence makes it high probability. Now, once again, to summarize, you want to see liquidity sweep into a key level, break of market structure shift, which is the break of the last lower high, then structural liquidity, divergence, and that's your entry. And for the bearish scenario, for the bullish scenario, this is the bearish scenario, you just have to invert it and you have the same thing. So what do we have here? Price is trending downwards. We have a higher time frame key level. Now what the price did there is swept liquidity, break the previous lower high, right? After breaking it, you want to see some form of structural liquidity that is close to that this other block that is formed. Then check for divergence. You take an entry. Once again, you want to see liquidity sweep into a higher time frame key level. Then a market structure shift, which is the break of your last higher a lower high, then look for structural liquidity, take your entry at the other block, check for divergence, it makes it high probability. So that's basically it. Now let me show you guys a couple of examples. And this is a trade we are currently at. Right, I actually call this trade in our free Telegram channel. If you're not there, definitely want to go and check it out. Now, what do we have here? We have the higher time frame key level here, and price is trending downwards. As if from this place, you can see that price actually trending downwards, forming series of lower highs and lower lows, lower highs, lower low, lower high, and then finally I marked this key level, expecting a reaction. I'm just expecting it, right? I'm not saying there must be a reaction. I'm just expecting it. And finally, we now swept liquidity, tapped into that higher time frame key level. Now we have some form of structural liquidity sitting at this place, and we've now broke structure, which is the previous higher low, lower high. I mean, after we break structure here, we want to look and see, yes, of course, there is structural liquidity. Then at this point, we can place our limit order stop loss at this place. Now you want to, and then you can expect price to trade to this place. Now you want to look for divergence to make that is what is going to make it high probability. Divergence with the correlated pair. And this is USD JPY. You can check for GP JPY or you ask ChatGPT what is a correlated pair. That's how you can easily find it. And for the correlated pair, you want to see, in this case, this one swept it. The correlated pair, you want to see that it didn't actually sweep it. You want to see that what happened here is that price come down here. After coming down here, it now did something like this. Let's try to mimic the same pattern. Did something like this. Okay, no, I made a mistake. It did not sweep this thing before it finally break the structure. Right, so at this place you can see it swept it, but in this one case it did not sweep it. It is, you see, this is a crack and correction. You now have something like this and you have something like this. So this is the first example. Let me show you guys another example I'm looking to take now. Let me show you guys a couple more examples. So this is our next example, right? So this one is on GPAUD. This is the daily time frame, and as you can see here, this is actually a trade we called in the free Telegram channel. It's currently running. So as you can see, we tapped into this higher time frame key level. That's the stage. I marked this higher time frame key level because the trend is bullish. So I marked this higher time frame key level, expecting price to start reacting off of this place at first. So I'm already anticipating a reaction from this key level. Now this is the 1 hour time frame. Now, as price tapped into, as you can see, price was actually bearish throughout all this place, trading all the way down to this place, forming series of lower highs and lower lows, lower highs and lower lows. Now, as price tapped into this place, notice what it did. It swept liquidity. After sweeping liquidity, it tapped into that key level that we have been anticipating, the higher time frame key level. Now, it had some form of structural liquidity, which is, and so finally, we now break structure at this point. Now, at this point, we can see that we have structural liquidity. It tapped into a key level, it swept liquidity. We now set our limit order, expecting price to expand higher. Now, we can actually go and look for divergence. I didn't actually look for divergence when taking this trade, but if you had divergence, it actually makes it high probability. Yeah, I don't want to make this video long. I hope you guys understand it. If you don't understand it, just leave me a comment and this and I'll make a new video. And I'm actually always live trading, so you're going to get the point. You're going to understand it if you are watching my live trading video. Yeah, I hope you guys understand the video. I hope you guys liked it. As always, smash the like button and do the necessary stuff. I'll see you guys around.